is that these two are useful idiots.
Right.
They are just pawns in a very large, very elaborate system that was designed, one, to do money laundering, and there's clear evidence of money laundering. Two, that perhaps there was intent. Again, this is a supposition, not an accusation. I'm just trying to put the pieces together. It is certainly possible that there was an intent by someone or someones to have this be an example set so that regulators could come in and punish the industry.
The clamor for regulation, as well as the crypto liquidity and contagion problems following the collapse of FTX, suggests that its founder, Sam Bankman-Fried, was likely a pawn and useful idiot, according to Mark Yusko, CEO, founder, and chief investment officer at Morgan Creek Capital Management. Yusko pointed out how crypto and DeFi pose a threat to traditional finance and how Bitcoin is a challenge to fiat currency and central banks. He contends that the FTX collapse and contagion, which has adversely impacted market liquidity and market sentiment and created an opening for regulators to impose tough restrictions, could be by design. The fallout from the collapse of Sam Bankman-Fried's now bankrupt FTX empire continues with another digital asset startup, BlockFi, announcing it has filed for Chapter 11 bankruptcy protection, according to a report by Pensions and Investments Online. In the filing made in the United States Bankruptcy Court for the District of New Jersey, the company indicated that it had more than 100,000 creditors with liabilities and assets ranging from $1 billion to $10 billion, including partners of Russian-born Israeli business tycoon Yuri Milner's DST Global, Susquehanna Capital, Mark Yusko's Morgan Creek Capital Management, and the Winklevoss Twins Venture Fund, according to Prekin data. In the filing, the Jersey City-headquartered company also listed an outstanding $275 million loan to FTX US and blamed its problems on the failed business. BlockFi reportedly owes its top 10 creditors close to $1.2 billion among them. Among them is the U.S. Securities and Exchange Commission, which is owed $30 million after BlockFi agreed to settle charges that it failed to register its products properly. Blockchain technology replaces trust with truth, Yusko said. Who are the arbiters of trust today? Financial institutions, third-party middle people, a $7 trillion industry. They would like to not be disrupted by DeFi and digital assets. It is possible that some group of incumbents might have tried to lobby for regulation to delay, obfuscate, or change the course of this tech disruption. Yusko suggested that the FTX collapse did not end with Bankman-Fried or his associate Caroline Ellison, the former CEO of FTX's sister company, Alameda Research. He implied that there could be more powerful entities conspiring to take down the crypto industry. We would now go into the video to get a view of what went down and other confidential nuggets of information that was shared by Mark Yusko. As we proceed, remember to like the video, subscribe, and drop your comments.
Literally 24 hours after Bernie admitted to his son that he, had perpetrated a big fraud, he was in handcuffs. And, he was my neighbor here in North Carolina for a number of years before he passed. In prison. So look, the fact that SBF is on a press tour and not in a jail cell is incomprehensible. The extent of the fraud is clear. We, Morgan Creek, are large investors in BlockFi. Everyone knows, and it's a public, I can give you public available information. Mm-hmm. Public information is that BlockFi had made a large loan to Alameda and had dealings with FTX. There are now that's all I can say, that's the public information. There are lots of suppositions and speculation as to some things that went on in the closing days before the bankruptcy. But the reality is that they lied about collateral. They said they had good collateral and they didn't. That's fraud. Same thing that Three Arrows Capital did when they told lenders that they had good collateral or they had equity, which they didn't. You can't have a balance sheet with $700 million of assets and $10 billion of liabilities without committing fraud. It's not possible. To FTX, that money vanishing, personal loan to SBF, massive donations to Democratic Party. And here's the thing, in the olden days, if you and I got together in a park and I brought my backpack and I put on the bench next to us and then I walked away, and you're like, Mark, your backpack, and you looked inside and it was full of cash, no way to trace that. If you actually sent all this stuff through digital assets, people can trace it. So it's not conjecture that Ukraine sent money to FTX. That's not conjecture. It's fact. So it's not a conspiracy theory. It's fact. Now, the part that's missing is how the money got from customer accounts into Sam's pocket to make the political contributions. That's a little bit unclear, but that's where the fraud comes in.
FTX filed for bankruptcy on November 11th after suffering a liquidity crisis and failing to honor withdrawals. As a result, many companies in the market bore the brunt of the impact and were directly hit by the storm. Digital Currency Group subsidiary and institutional trading firm Genesis has $175 million in locked funds within the firm's trading account on FTX. The firm's creditors hired restructuring lawyers and are exploring ways to avoid filing for bankruptcy. U.S.-based lender BlockFi filed for bankruptcy earlier this week in a New Jersey court, simultaneously slapping Bankman-Fried with a lawsuit in the same court. Meanwhile, a hedge fund managed by a subsidiary of German crypto platform Immutable Insight also revealed that it is exposed to FTX fallout and is owed $1.6 million. FTX owes its 50 largest unsecured creditors a total of $3.1 billion, according to a filing at a Delaware court. The identity of the claimants remained unknown, but the filings show that 2 of its largest customers are owed over $200 million, while all 50 of them are owed $21 million each or more. Many investors and crypto spokespersons believe that the FTX contagion will keep spreading for some time, but they are still optimistic that it is just a phase and would be resolved with time. Crypto is too strong to crumble because of FTX collapse, according to some crypto enthusiasts. Mark also in this video reaffirms that belief. When asked about his thoughts on the FTX contagion and how it would affect the crypto world, Mark had quite a mouthful. Let us hear what he had to say.
Chapter 7 is liquidation. Chapter 11 is restructuring. United Airlines, bankrupt twice. Lots of companies, the automakers, General Motors, bankrupt. Doesn't mean you stop driving cars. Doesn't mean you stop taking airplane flights. This doesn't mean we're going to stop using crypto. Doesn't mean we're not going to have exchanges and lending institutions. These companies will restructure. Maybe some of their assets will be sold in bankruptcy auctions and they'll get merged into others. Maybe one of the big institutions will buy some of the new technology. But 11 is not the end. It is a new beginning.
Right.
And, Will Smith said it, and I know Will Smith is not popular, but he was very cool when I was growing up and I still admire him.
Fresh Prince of Bel-Air.
And, he said, fail fast, fail forward. So it's okay to fail, but you got to get up. And back to the last quote, right? Knock down 7 times, get up 8. We're going to get knocked down and we're going to get beat up, but we're going to, as an industry, we're going to keep moving forward and we're going to make progress. And this technology is inevitable. It is the future of finance. It is the future of money. And that's all good. And that means, so the fourth part of the terms of, then you win. The good news, if you're here, you already won. We have already won. We just got to endure this, spring squall.
What do you think of the speculation around the SBF fraud and people backing him? Let us know what you think in the comments. Please endeavor to hit the like button, subscribe, and turn on notifications. Thanks for watching.